Hello, and welcome to today's webinar hosted by Left Brain Professionals. I'm Stephen Bressler, and I'll be your host and moderator today. If you need any help at any time, you can email us at support@leftbrainpro.com or use the chat function within the Flow platform. Let's go over a few housekeeping items. Today's webinar is hosted on the Flow platform. You should see a small toolbar with 4 icons in the upper right-hand corner of your browser window. The first button will mute the audio. The second button will put the webinar into full screen mode. The third button enables the chat and Q&A, and the fourth button will enable you to view the settings. Please enter your content questions in the Q&A panel at any time during the presentation. We'll address as many questions as we can and use the chat feature to chat with hosts, presenters, and other attendees. Please do not put content questions in the chat panel as they may get lost among other conversations. If you have connection or audio issues, we have a couple of solutions to try. Turn off your VPN, test your system using the links provided, exit and re-enter the event, potentially try using a different browser, connect from your personal PC, phone, or tablet, contact Flow support, and I know they're on the event today with us, which is great. Confirm in the gear setting that your microphone and camera are identified. And in order to receive credit for today's presentation, you must respond to 3 of the 4 polling questions. Certificates are generated automatically and will be emailed within 48 hours after completion of the webinar. A survey will display in your browser at the end of today's webinar. Please take a few moments to answer the questions and provide any feedback. The recording of today's presentation will be available on our YouTube channel, and the link will be included in a follow-up email. So thank you for your attention, and without further delay, I'll turn it over to Robert for today's content.
Well, good afternoon, and thank you to everybody for joining us. I just want to share our brief little bios and pictures here on the screen. You're going to see Suzanne pop up and be visible in a moment. I'm sure she'll jump in and help answer some questions and provide some highlights as we go through. Today's topic is month-end closing, and specifically we're going to be talking about checklists and the process. Really quickly about us here at Left Brain Professionals, if you're new to joining us, welcome. We are a boutique accounting firm that works only with government contractors. We practice primarily accounting system implementation, design, audit support, do a lot of strategic work with our clients around indirect rates, pricing, the incurred cost proposal, and various DCA audits and questions. If you interact with us, you'll see all 3 of us are on today's webinar. Our learning objectives for today, at the end of our roughly 1 hour together, you should be able to develop a comprehensive checklist with responsible parties and due dates, design templates for common or repeated tasks, categorize tasks as pre-closing, closing, and post-closing, and eliminate wasted time, steps, forms, or routings from your overall process. I'm going to go ahead and start with a polling question. So let me kick this off.
Okay, how long does it take you to close each month? The options: 1 to 3 days, 4 to 6 days, 7 to 9 days, or 10 plus.
All right, we'll go ahead and close it out. It looks like most people have participated. And we've got answers all across the board. So we definitely have some people who are closing quickly, as well as some of you who are in the 10 plus category. We'll talk a little more about that as we go through the presentation. So let me go back to the slides. All right. The first thing I want to do is talk about having a comprehensive checklist. And this really needs to be, as it sounds, comprehensive. Go end to end from your entire closing process and don't leave anything out. Even if it seems like something small, you might be surprised at the impact that it has, again, on getting everything completed. I should start and say that I'm kind of borrowing a lot of this from some experience that I've had through the years, working for different companies, working with a number of our clients as well. And a few years ago, actually a little more than a few years ago, probably more like 10 or 12 years ago, I worked for a company where we brought in an outside firm that actually helped us get our monthly close. As you know, see in my italics here, we had to close one of the corporate requirements by our parent companies that we had to close by noon of the third business day. And sometimes when I tell people that, I can see their head starts to explode and they think, how in the world would I ever be able to close by noon of the third business day? Especially those of you who answered that you're somewhere in the 5 to 7 or 10 plus days of closing. It is possible. And we were a large multi-million-dollar company. We were about $45, $50 million in revenue, annual revenue at the time. And I know companies that are even bigger that do that. So it absolutely is possible. But much like what we had to do, it was bringing in somebody to help us map out the process, think about things a little differently. And a couple were making sure that you identify responsible parties so that there's one name for each task, and then assigning due dates and times. You'll see a little more of that as we get into when I break out a sample checklist for you. But for example, we knew that on day one by 8 a.m., these things to happen. By 10 a.m., these things needed to happen because we said, okay, if this is where we need to be at noon on the third business day and work backwards, what are those tasks in order? How long does it take to complete the tasks? All of that goes into this planning. Your checklist or your process really needs to be time phased. So recommend that you at least create a process flow chart to start. What needs to happen? How does it need to happen? Are there tasks that can be performed in parallel versus tasks that have dependencies, right? Where you're waiting on somebody else. So for example, and I know this will certainly apply to a number of people on the call today, you can't create your monthly invoices, many of you cannot, for services if timesheets and expense reports haven't been approved and loaded into the accounting system as of the last day of the month, right? So what that means, then one of the first things that needs to happen on day one, right? So if we're talking, we're closing out August and we're talking about September, then one of the first things that needs to happen on September 1st is that all the time and expenses have to be approved and have to be imported into the accounting system, whatever that means for you, so that somebody can then begin to create invoices. Might be similar issues for accounts payable or other items. But at the same time, especially if you've got multiple people in your accounting department, they don't all need to be sitting around twiddling their thumbs waiting for time and expenses if there's something else that they could be doing while we're waiting on that. So as we look at this process, we're going to see there are some parallel items. And there are some items that, so I can do this while I'm doing that, or I'm waiting on this, but I can't do this one until this other piece is finished. Okay. And again, when you map it out and you really better understand that, all of this will come together. Then what I recommend is taking all of your tasks and sorting them into 3 categories. So my categories are pre-closing, closing, and post-closing. And some of you might be saying, well, Robert, isn't it all closing? And how in the world how do you close the month before you can close the month, kind of thing, right? Maybe it sounds silly. But let's talk about what some of these categories involve. In the pre-closing, and again, this was one of the things that we discovered a number of years ago, is that we were waiting until the first business day of the next month before we started any of this. That was part of the reason that it took us, and I don't recall at the time, I think we were somewhere in the 7 business days on average of closing. And one of the reasons is that we didn't start any of these tasks until the first business day of the following month. And then when somebody challenged us and we looked at it and said, well, you're right. Actually, some of these things we can do before the end of the month, right? So some of them could actually be done throughout the month, maybe some of them at least the last week of the month as you're getting ready to roll over. For example, payroll journal entries. Many or most companies are biweekly payroll. And, it's very rare that the biweekly actually lands at the end of the month. Now, if you happen to be one of those companies that maybe is doing monthly payroll, then obviously some of these tests are going to change a little bit. But if you're a biweekly payroll, chances are you do or you could have all of your payroll journal entries done before you go into month end. Some of your customer invoicing, and you're going to see that I've got this in a couple of spots, it depends on your business and what you're doing, okay? So for companies out there that are shipping product throughout the month, you're probably generating invoices throughout the month, and you're not waiting until the next month to do that. For companies that provide services and you want to make sure that you invoice everything that happened up to the last day of the month, then you're invoicing some or all of it may not occur until the next month. And there's probably some companies that do a little bit of both. There's probably some of you out there that do some invoicing throughout the month for work that you do, and you do some invoicing at the beginning of the month. You can start your bank recon, especially if you're using QuickBooks. Obviously, you could do it with a number of others. But one of the nice things about QuickBooks is that you can start and stop the bank reconciliation at any time. So there's nothing preventing you from the last week of the month importing what you have for the bank reconciliation. You could get 3 or 4 weeks done. Maybe you could get 28 or 38 days done. So you only have a couple of days left at the end. Various balance sheet reconciliations. Many of those are just part of good practice, and they don't necessarily require you to be at the month end or even at the quarter end to do those, whatever the timing is of those balance sheet reconciliations. You could be doing them throughout the month. A couple of examples of those are prepaids, right? So hopefully you're reconciling your prepaids on a regular basis. Your PTO reconciliation really ties in with payroll, right? PTO reconciliation could be completed at the same time you're doing that second payroll, or if it happens to be a third payroll in a month. Similarly, for fixed assets and depreciation, many companies don't have that much activity in the world of fixed assets and depreciation. So there's nothing preventing you from, again, completing that reconciliation and doing the depreciation journal entry even mid-month, right? Then it's done, it's out of the way. Now, if you happen to know that you've got something else coming in, maybe you've got some construction in progress type of things, then obviously you need to make adjustments. But again, we see for many of our small clients, they have so few fixed asset transactions throughout the year, easy to do that. Similarly for lease accruals, right? So if you're following ASC and you're doing what you need to do for lease accruals, another transaction that could easily fall into that pre-closing category. So stop for a moment here and look at this list and think about what are you doing as part of your closing process, and realize that all of these things could happen before day one of the next month. Now let's talk about what I call the actual closing process, okay? So again, some of you might be customer invoicing, right? You might be waiting on that month end time and expense data to be able to create those service invoices. Revenue recognition might come into play. And obviously we do a deeper dive on revenue recognition elsewhere. And so I don't have time for the details of that here, but keep in mind that just because we create an invoice doesn't necessarily mean that we get to recognize the revenue, and vice versa. There are situations where we recognize revenue and may not actually create an invoice, okay? Don't want to get too far off track with that, but keep in mind that revenue recognition is one of those pieces of closing and probably is obviously going to fit within the closing section of our categories because we need a lot of that other information. Our final bank reconciliation, right, is going to occur during closing. We need those transactions from the last few days of the month, as well as a labor distribution and a payroll accrual. Now, again, labor distribution is something that's unique to government contractors. I know that we have many government contractors on the call today. If you happen to not be a government contractor and you've joined us for the first time, you're certainly welcome. We appreciate your attendance. If the concept of labor distribution is new to you, shoot us an email. I'll be happy to explain it and talk about it in more detail. But many of you probably know what that is. And then again, your payroll accrual, obviously, we're not going to be able to do that payroll accrual until, right, everybody has entered their time through the last day of the month, and we can calculate what that accrual amount is that does need to be entered. That then takes us to our post-closing. So these are the things where, and again, in my brain, just so you know where I am, let me back up a couple of slides here at a moment and put the time frame on this. If I go back to my closing by noon of the third business day, all of this stuff on the pre-closing is day 0 or before. We pretty much called all of it day 0, meaning, right, the new month hasn't started yet. All of this stuff here is day 1, 2, and half of day 3. And then all of my post-closing is all of the stuff after that. So after noon on my third business day, and you might say, well, Robert, if you had to close by noon on the third business day, didn't you have to finish your financial statements? For us, that was not necessarily true. We had to be closed, meaning that there were no more journal entries. We had everything posted. Everything was good. We were comfortable with the numbers. We had to load our numbers into an online tool that aggregated multiple companies. We were owned by a parent company that owned multiple companies. They had to do consolidated financial statements. So we just had to have all of our transactions complete and posted so that we could upload those numbers. The actual creation of our financial statements with notes and additional analysis and that kind of stuff occurred after that. Some other things that, again, might fall in here for our government contractors on the call or on today's training, indirect rate reports, again, that deeper analysis and reversals. Suzanne reminded me yesterday when we were tidying up the content of this that sometimes people forget about reversals, meaning that we post, we might post some kind of accrual or other transaction that needs to be reversed out, and we forget to do the reversing in the next month. And she said, make sure somebody knows that somebody needs to be assigned to the reversals. So Suzanne, any other comments on these groupings here before we move on?
I was just thinking about the bank recs, and I know with companies with large numbers of transactions that's really cumbersome at the end. And even with a large company, I know in Cost Point, you can clear checks daily. So you can have somebody print out of the bank every day what's cleared and assign someone to clear checks on a daily basis. In that way, you catch a lot of the problems way early and you have more time to fix them.
And that's a good point, that catching stuff early, right? That's one of the things, is that you wait until closing to do this. All of a sudden there's some discrepancy, right? That was on the second or third day of the prior month. And now that's, causing delays in getting the current month closed. All right. I believe, yes, we have another poll. So let me click the button to set that off. All right. Oh, Steve. So I think Steve's having some technical issues. I'm just going to read it out loud so everybody can hear it. What keeps you from closing in a more timely manner? And this is a multiple choice. You can select as many as you would like. And I do see that we have a bunch of stuff coming across here. So a little bit of everything. I will say bank reconciliations and customer invoicing are the top. We do have some people clicking something else. For those of you who click something else, I'm curious if you would, in the attendee, just throw in there some things that maybe we didn't think about to put in these categories. So if you click to something else, go to the attendee chat and share with us what some of those other things are. And I'm going to go ahead and again, just a final check, customer invoicing and credit card and bank reconciliations are two of the big ones. And I've got a couple of ideas about that that you'll see a little later in our presentation. So let me go back to the slides. All right. So here is a little deeper dive into the sample checklist. And I do see some people chatting over here. So Wendy says proofing of job cost reports by supervisors. That's a big thing, certainly for government contractors. We've actually had that conversation recently with a couple of our clients where they're struggling with invoice accuracy. And what we're finding is that they don't have people who are reviewing the job cost reports. And so if you're not reviewing the job cost reports, then when somebody creates the invoice at the end of the month, you're going to end up creating, you know, an inaccurate invoice because something didn't get moved. Subcontractor invoices, project managers not getting info back to accounting in a timely manner, sub invoices again, investment statements. We just received the Wells Fargo today. Yep. We've seen similar issues like that as well. So all good. Thank you for the feedback. Back to our sample checklist here. And again, I've got this broken down into these days. So day 0, what I call planning and preliminary items that are not closing date sensitive. And we've already talked about some of those pre-closing items up above. Day 1 is ensuring that everything is entered and ready for customer invoices. Again, primarily focused here for a number of our service-oriented, and even if you're not service-oriented, many of our government contractors, depending on the type of the contract, the type of work that you're doing, you may only be creating an invoice monthly. So again, making sure that timesheets are entered, that they are approved, that they've been imported over, back to Wendy and Vin, and I think somebody else saying, you know, making sure that the job status reports have been reviewed, any corrections have been made so that when we create the invoice, we're creating an accurate invoice. Same concept for the expense reports. And I'd be curious, how many of you are doing job cost reports or job status reports? People call them different things, but all the same concept. How many of you are doing those weekly? Do you do them monthly? We used to do them weekly in one of my old employers from many, many years ago. We actually closed on the 4-4-5, right? Meaning that we had a 4-week month. We closed the last Friday of every month. So one of the nice things was that we did do the job status reports weekly. And so if you do that, at least the first 3 or 4, if it's a 5-week month, most of the month you're getting all the corrections in before closing, and then when it came to closing, we just had the last week to review. It made life a whole lot easier. Again, day 1 here, we've got to finish out that bank reconciliation. That can also be, I say bank, but that could be checking, savings, credit card, somebody's got investments, all of that kind of stuff. Your AP accruals. Suzanne said, when I asked her and I said, hey, what's another item? And she said, too often people are missing the AP accruals, right? So that's your received, not invoice. Somebody has delivered products or services, okay, that were rendered in the month. We received that product or service, but we don't actually have the invoice yet. Okay, we have to accrue for that, right? That's a liability of the company, and it's got to be in there.
It's usually subs. Subs are the big one that's a huge problem on the AP accruals.
And we saw that from a couple of people over here in the chat saying subs are not getting the invoices to them. And, you know, Suzanne, I guess as we think about that, right, they're doing what we're trying to do, right? They're trying to get their time entered, their expenses entered, generate their invoice so they can get it to us. So they're doing all the same stuff that we're doing. But unfortunately, we're waiting on them for a key piece of input into our stuff. One of the things that I would say there, I'll give another hint towards this when I talk about it later some, is using a timekeeping expense reporting tool that your subs use so that you're capturing the time and expenses, can get them into your system, can get them on an invoice to your customer, and then your sub submits their invoice at the end of the month that you can then marry up to that timesheet and expense report. That's something that has worked well for a number of clients, and we can walk you through that as well. All right, day 2. So this could be, again, preparing the customer invoices and recognizing revenue. Kind of depends on the timing. And let me just say again, what we're talking about here today, you're going to have to adjust to your business. How does your business operate? What are the products and services? What are the contract types? How many subs do you have, right? All of those are going to be factors into how you potentially lay this out. But if I back up a slide for a moment, we see here day 1, I'm focused on getting all of my time, all of my expenses, everything in that's going to be necessary for me to create customer invoices. Now, if I could get all of that in by noon, and I could start creating invoices on the afternoon of day 1, that's great. But maybe I know that's going to take me all day to get that stuff in. So now when I come in day 2, I actually start creating my customer invoices, go through my revenue recognition. The first one on here is one that is a dog. Somebody's already mentioned it, I think, or we've at least talked about it in terms of proofing job cost reports. This is an issue that we encounter with almost every client when it comes to the incurred cost proposal. Completely separate topic, but it is related to all of this. This concept of reconciling the job ledger, job cost ledger, whatever you call it, to your general ledger, right? That means that whatever is on your general ledger in terms of direct costs or cost of goods sold, you should be able to have job status reports, project status reports, that if I add up all of the details, the sum of the parts has to equal the whole, right? So the whole is my top level financial statements. I've got my direct or my cost of goods sold, and then I've got all of these job status reports, and I should be able to add up all of these and they equal the whole. And too many times we find variances in there. And usually those variances, they occur because people will do adjusting entries and they'll forget and they'll do them incorrectly. They'll end up adjusting the general ledger without correcting the underlying job ledger or vice versa. Some systems, and it kind of bugs me that some systems allow you to do this, but you should, as a process, remember, hey, wait a minute, if there's something wrong in the cost of goods sold or my direct costs in my general ledger, I need to go back to the source documents. I need to go back to the timesheet. I need to go back to the expense report, and I need to process that stuff through the job ledger so that my backup documentation matches. So my expense report, my timesheet, my accounts payable, whatever it is that's flowing through there. Now my backup documentation matches the job ledger, and my job ledger matches the general ledger. But I recommend making sure that you do that reconciliation before creating invoices, right? Because that could be another area where you find an error. We're going to create our invoices. We're going to do, again, revenue recognition. But and I think we've got this topic slated for December of this year, if I remember correctly. We're going to do a little deeper dive. Some of you may have already, have taken some other webinars on revenue recognition. I just want to point out that government contractors have a unique issue in revenue recognition, and that's because those contracts have the termination for convenience clause that's unique to government contracts. And so that creates a unique revenue recognition issue, okay? If you don't know what that is, contact us, be happy to talk about it. We're going to do a deeper dive on that subject in another month's webinar. And then the other item here related to all of this are AR accruals, where again, I could have revenue in excess of billings. I have situations where I'm recognizing revenue, but the billing, I'm not allowed to bill my customer, right? And that could be because that's how my contract is set up. I might be set up that I only get to bill at the end of the project or at a certain milestone, okay? But that doesn't mean I haven't recognized revenue. Billings does not always equal revenue. That's one of the things that a lot of companies struggle with. Billings does not always equal revenue, and we have to make those adjustments in the general ledger. And then day 3 here was what I call really the final reviews and validation. So hopefully, right, the first day we've got all the time and expenses and all the stuff in. Day 2 was all of the revenue. Hopefully I've done in my day 0, my pre-closing, I've done a lot of my preliminary stuff. So day 3 is I'm running preliminary financial statements. I'm looking for any issues that pop out. I'm validating my checklist. Did we do all of the stuff on the checklist, right? Did it get posted? All of that kind of stuff. Again, I might have preliminary financial statements. I said minus the notes just because, again, from a timing perspective, I probably don't have time to get all of my notes in there. And depending on your situation, you might be doing some type of high-level presentation to owners or senior management, right? They want to know, hey, what was the total revenue? I know for us, it was a big deal back then. It was, we'll deal with the details later, but what was the total revenue and what was the gross margin and stuff like that for the month? Those are key numbers that somebody wants to have, even if they don't have the detailed financial statements with all of the notes. Suzanne, I guess before we do go on to the next, any comments on any of that stuff?
No, I mean, I think you're really covering it here. It's really all about planning ahead and just getting all of this stuff down for your company. And it may take more than, 1 draft, 2 drafts. You're going to find things for a while that you have to keep adding into your list as you go.
Yeah, it took us, I don't remember exactly, but it definitely took us a couple of cycles, right? Because this is something we only do it once a month. It's not something we're doing every day. It definitely took us 2 or 3 cycles to kind of get down to actually being done by noon on that 3rd day. But then once we got it, man, we were in our stride. So some common issues here. Suzanne, I don't know if you want to jump in on any of these. We've already talked about missing AP. What other things come up for you when you're trying to help clients close?
Sometimes just the fact that they have to get data from other people, so they're not in control of the data, is a real problem. I know one of our attendees mentioned that they have to get their accruals for PTO from HR. So, you may have to have a talk with HR about how really super important it is to do that. Or, finding out that your managers maybe aren't the best people to sometimes do the sub accruals. Maybe you have to move to a different level of management for that, somebody on the deck plates.
And those other parties are a good reason that, to sit down, as I was saying in the opening of the presentation, to do a process map and bring those people into that planning so that they can see, hey, right here, we need this piece of information and it's a critical item that goes over to here, right? So at this point, we're waiting on you and them understanding that, that they have a responsibility for it and they understand the timing of that. So don't leave them out of that process planning, and the flow chart. AP and AR in the wrong month. This is something that constantly happens, and there are various reasons for this. I think that, and I guess we see it in a lot of clients. We see it, I think, a lot of small clients who are using QuickBooks, because we might enter a statement or an invoice the day that I received it, when it's actually for next month's rent, or it's for some service that's being provided next month, or next quarter, or next year, whatever the case may be. Vice versa, sometimes we're entering stuff in the following month, right? So we don't get the invoice until the 3rd or 4th day of the following month, and somebody doesn't pay attention and they enter it with the date that it was received, not the date that the services were provided. So we got to watch for that kind of stuff. Similarly for accounts receivable. So I can say, actually for us as a firm, this is an interesting issue of sorts, because most of our work we bill at the end of the month for services that were delivered in the month, but we also offer monthly support packages, and we bill for those in advance, right? So we bill on the 1st day of the month for the coming month, if you have one of those, because we're providing those services throughout the month. And we have other stuff where we bill at the end of the month. So actually the last day of the month, if you were to come in and look at our invoices when we're doing, or really right the first week of the next month, if you were to look at our invoices, you would see some of them are dated the last day of the prior month, and some of them are dated first day of the current month, depending on the nature of what's going on. So again, another issue there was making sure we get AP and AR aligned. All right, let me kick off our next polling question here, and I see a lot of good chat going on.
Okay,
right, Steve,
hopefully my audio is coming through. Do you use any of the following tools? Import time for automated invoice generation, import expenses for automated credit card reconciliation, mock payroll in QuickBooks for labor distribution, automated accounts payable and payments, or automated accounts receivable and receipts.
And we have votes coming in all across the board. It looks like importing time and importing expenses are the top two. Automated AP and payments is a close third. So I'm going to talk a little bit about some of this stuff in a moment. So it's good to hear that you guys are doing it. I only see a few people clicking that mock payroll in QB. I'll be sure to talk about that. So
we'll give everyone about
seconds.
Yeah, 5 more seconds and get the poll closed so we can get back to the content.
All right, looks like voting has stopped, so I'm going to stop the I'm going to go ahead and stop, and let me go back to the story. I'm sorry, let me go back to slides. Here we go. All right, let me just chat about some of these items really quickly for some of you who may not be aware of what we're talking about here. So importing time for automated invoice generation, we have some clients who are still manually creating invoices. If you're using an online timekeeping tool, and there are a number of options out there, and if you're using QuickBooks as an example, though they work with other software, if you're using something like Uninet or Procast or GovCon 365, one of the cost point, or I should say one of the Deltek products, well, many of them have timekeeping built in. But if you're using QuickBooks or Xero or something like that, there are timekeeping tools that your employees enter their time, supervisors approve it online, and then you can import that time directly into the accounting software. Makes life a whole lot easier. Similar concept for expense reporting. These tools, both of these tools will synchronize with your accounting software. So when your employees log in to do their time or to do their expense reports, they see the projects that they can select from that they've been assigned. They can see the expense categories, all of that kind of stuff. When they do it and it's reviewed, then it makes life for the accounting team a whole lot easier, because now all they have to do is import the data. They don't have to rekey it. They don't have to try to figure out what's going on. It's just already there. And in the case of QuickBooks, and this is both QuickBooks Online and QuickBooks Desktop, I go to create an invoice, because this is exactly how we do it. I go to create an invoice and all of that stuff is there. I click a button, I add all the items to the invoice, and boom, within a couple of seconds, my invoice is ready to go. Now we go through an internal review process to make sure that that it's correct, but man, it really speeds up the process. If you're using QuickBooks Desktop, you have the ability to do a mock payroll and generate that labor distribution. Again, very simple, easy process. If you want to know more about that, contact us. Would love to show you how the QuickBooks, again, this is desktop only, doesn't work for online, to do that mock payroll. For automated AP and AR, there are a couple of different tools out there. Many of you are probably aware of things like Bill.com or Veeam. What's nice is that they synchronize with some of your accounting software. Even if they don't synchronize, you can still upload and download CSV files and such to make life a whole lot easier. Eliminate cutting checks. I know that we use Veeam. Again, I know a lot of people use Bill.com. What's really nice about both of those from an AR perspective is that your customers can pay you online through those tools. And when they do, it automatically posts. So it makes life just again, a whole lot easier for the accounting staff. We can spend time doing more value-added tasks throughout the month instead of chasing down paper and going to the bank and all that kind of stuff. All right, some of the other things, and I saw some questions coming in, which is good. Don't forget, if you've got some questions, put them over there in that questions tab, and we will have some time at the end to go through those. Make sure that you create templates, and do this for some common or repeated tasks. Set up a template for your reconciliations. Have a payroll template, have a PTO template. If you're reconciling fixed assets monthly or quarterly, and again, some of these, let me pause here and say there's no right or wrong answer. Certainly, within the balance sheet, you should be reconciling those accounts at least annually, right, to validate that everything is there. But many of those we want to put on some type of rotation. Obviously, we do our bank and credit card monthly. If you have a lot of fixed assets and a lot of change in fixed assets, then monthly reconciliation of fixed assets probably makes sense for you. If you're somebody who adds 1 or 2 new fixed assets a year, semi-annual reconciliation of fixed assets is probably okay. And again, make adjustments up or down as appropriate. Quarterly might make sense for some of your, again, prepaids. If you've got a couple of prepaid items, quarterly, reconciliation of the prepaid account is probably okay. If you've got 20 or 30 prepaids and you're always adding and removing something, monthly probably makes sense. Regardless, the concept here is make sure you've got a template. Make it easy for somebody to get this work done. Same thing for your journal entries. Many of your accounting software out there now will let you create templates for your journal entries. And so you can say, here's the template for depreciation. Here's the template for payroll. Here's the template for fixed assets. And what's nice about that is, just as it sounds, it's a template. You set up all of the accounts. Here's my debit accounts. Here's my credit accounts, all of that kind of stuff. And then somebody says, oh, I want to go enter a payroll journal entry. They click the payroll template and boom, half of the work is done for them, right? Now, I say half, but I mean, you still got to get the numbers in there, but you are already telling them these should be your debit accounts and these should be your credit accounts. And one of the things that you can do is build the same thing in Excel so that, if somebody, for example, like your PTO, and this is what we do for our clients, we take your PTO template, or your PTO reconciliation, it's in Excel. On one of the other tabs, we actually have a journal entry template on the other tab. So you do all your work on one tab to validate what the balances are and what everything should be. But then on the other tab is the journal entry. And so if you've got that in Excel and you create the template in your accounting software, boom, it's really easy for somebody to cut and paste and know exactly where the information goes, really speed up the process. And then, eliminating waste. Eliminating waste is got to be one of your primary goals. If you didn't catch this from when I started and I told you my story, again, I don't remember exactly, but we were somewhere in the 7 business days of closing. And when we were purchased by another company and became part of a larger conglomerate, because they were a publicly held company, we had a requirement that we had to have our books closed and financial information to them, by noon of the 3rd business day. And you might say, well, Robert, how did you get from 7+ days down to, 2.5? Now, part of that was, again, by moving some items to day 0 and realizing there was some preliminary stuff. But the other is that we realized there was actually a fair amount of waste in our process. We did not align and look at it and say, oh, this person needs this piece of information and they're waiting on this. Okay. If they're waiting, are they, and again, we found this a couple of times, the person was literally sitting in their office twiddling their thumbs. And we're like, what are you doing? And they're like, well, I need this other piece of information. Okay, there's 12 other things that need to be done. Yeah, but I'm waiting on that. Okay, but these other things don't require that, right? So if you get people to realize, hey, yes, in order to complete, step 39, you're waiting on step, 27, because somebody's got to complete 27 because that feeds into 39. But steps 28 through 38, can be things that you're doing while you're waiting on somebody to complete step 27, as an example, right? So that was some areas where we realized we could eliminate waste. And the other goes back to the things like the templates, just making stuff simpler and easier, faster to do, taking advantage of automating and importing time and expenses. All of those types of things make the closing process a lot easier. And I've kind of summarized those here, again, closing steps out of sequence, focusing on the wrong tasks. Again, we had people who weren't paying, and to their defense, they were saying, well, I'm doing stuff on the checklist that's part of the closing, but you're not focused on what needs to be done right now, right? And so that's one of the things. I cringe slightly as I say the next one, just because I will say that blocking the calendar for focus for the accounting team can be really beneficial during the closing process. The flip side of that is, unfortunately, what happens sometimes is we send this big X message to the rest of the organization. That can be a very negative message when and what I've heard, right, we've probably all seen and heard this. Somebody knocks on the door of somebody in accounting and they get the, get out of here, I'm trying to close the month, right? And so we want to be careful, and Suzanne's chuckling because we've all been there. We want to be careful about the message that we send. We don't want to be so negative to the rest of the organization, but we do want to let them know, hey guys, we're on a tight timeline. We have to get this done. And so we've got blocked time for focus. So part of that is also communicating, once you get this laid out, communicating it with your organization, but also making somebody available within your department, assuming that you are a department of multiple people, that somebody is available during all times, right? So from day 1 to day 3, okay, the morning of day 1, you can't bother Robert because he's dedicated. If you got a question day 1, you go to Suzanne, and vice versa. Suzanne's tasks might be primarily day 2. And so, we say, okay, day 2, you don't get to bother Suzanne. If you got questions, you need to go to Robin, right? So that's another way to work around blocking the calendar and having focus. Ignoring materiality. So what I mean here is we see this, we have people who spend hours chasing pennies and dimes. Literally. I mean, I used to work with somebody who would spend hours chasing pennies, and it's like, okay, we need to stop and remember the concept of materiality and say, it is an amount. I mean, certainly, I think as accountants, we are all perfectionists to a degree. We want everything to tie out to zero and to be perfect and beautiful. But the reality is sometimes it doesn't. And sometimes we just need to say, you know what, it's as close as it's going to get it. And yeah, I could spend another hour doing it, but we're talking about, and again, materiality is going to vary. It could be a few $100s, it could be a few $1,000s, but at some point we say, the return here is not good, right? I could spend more time, but I'm probably not going to get a different outcome. And I've already talked about all of that manual versus the automation side of stuff. All right, so we've got a poll question here. I'm going to pause on launching it just for a moment because we do have to get 50 minutes of content in here. So we've got some questions. I want to, let me do this. I'm going to jump ahead for a moment so we can cover the Q&A. Let me launch that technically. So Steve's on the screen with us. And Suzanne, I'm going to read the questions and let you work on answering some of these. So the first one says, does a small business working 100% DoD contracts have to have a structured month-end close? What is the downfall if you don't do a month-end close?
So I would say that you don't have to do anything, but that probably as a best practice for the business, you would definitely want to have a structured month-end close. And this may be put in place just in case you only have a couple of people who are working on your month end. And if something happens to them, it'll be an easier turnover if you have a system in place. You also, if you had a situation where you needed to have loans or you had to justify some sort of financial increase in order to get the next big DoD contract, the banks are going to be happy to see that you're rapidly closing and that you're not having to wait because your statements from 2 months ago still haven't quite gotten there yet. It also just looks really nice if your end goal is to someday sell the company, to eventually, to have that other practice in place. So, I mean, I would say that the downfalls, there are many downfalls. If you don't have this kind of close in place, you miss things and you trip over yourself, and it just takes longer. It's inefficient. It's just not a good practice. What do you think, Robert?
And I would say, well, I agree with all of that. I guess 2 comments I have. One is that I would say technically you do have to do it, especially if you have cost type contracts and you've gone through the SF 1408. One of the requirements of the SF 1408, which is that pre-award survey, a prospector contractor accounting system, is that you are closing on a regular basis. The other is that, really in line with what you were saying, Suzanne, one of the things you and I encounter a lot is that, especially with like family-owned or friend-owned organizations, there may not be a hard requirement to close in 2.5 days, but 9 times out of 10, the owners are chomping at the bit. They want the information, and they get frustrated when somebody in accounting says, well, we're just getting it done. We're getting it done, right? And they don't like that answer, right? They've got time and money invested in the business, and they want to know, they want to know what's going on. All right. Another question here says, for project status reports, if I want to run them biweekly versus monthly, are my indirect rates accurate if I'm running my rates and computing burden biweekly? Am I just making sure that I have any AJEs in and posted that I can put in, for example, depreciation based upon what the expense is? All right. So I'm going to answer this first, and I'll let Suzanne jump in. So first, I would say, and to clarify with everybody, like when you're running those project status reports and you're calculating indirect rates, you're probably only, if you're doing it mid-month, then your rates are only going to be accurate through the middle of month. So you've got to keep that in mind. You do have the option, you should have in most of your systems, of running your project status reports at budgeted rates and or at actual rates. So some systems only allow you to print reports one way or the other. Some systems allow you to print, okay, here it is with my budgeted rates, here it is with my actual rates. So depending on your system. But you do bring up a good point in this question. Suzanne, any other comments?
Just that it seems as if rates are always going to be skewed because they're an annual type thing, and forward pricing rates are developed based on budgets. So at any point when you run those reports, you're never going to have the rates exactly like they're going to be. They're more just to tell you, like, are you on track? Are there things that you're coming up that you're doing? That's not me. That's not my job.
Yeah, Steve, if you can hear me, if you can go offline. I can't seem to mute you. I don't know what's going on. Sorry, we're having some technical issues there. Yeah, the other thing that I was going to say is, remember that a big part of your project status reports and what you're trying to do is make sure that all of the direct costs are accurate. That's really, don't get me wrong, the indirect rates and from a project management perspective, as a project manager, I want to see my total cost, but what we're really looking for there is making sure that all the time and expenses have been charged to the correct project. All right, another question here. Hi, Robert, I see that you said you use Veeam. Do you use it both for invoices as well as AP? Yes, we do. It currently does not integrate directly with QuickBooks Desktop. You can do it does integrate directly with QuickBooks Online, but not with Desktop. I believe that Bill.com integrates with Desktop. And we've got one more question here. As we take this question, I'm going to go ahead and put the final poll on the screen. So let me get that started so everybody can answer that poll question. And Suzanne, I'm going to bring you back on air, hopefully. There you are again. And the last question that we have here, how do you even go about executing month-end close if you're a small enough business that you have 1 to 2 people functioning as your accounting department, along with functioning as your contracts and proposal department? It would seem like there's not enough time in the work week. Well, Tammy, I agree. Again, my high-level response is go through what we've talked about here today, put that stuff in the pre-closing, closing, post-closing categories. Look at automating as many of those things as possible. Again, if you're not taking advantage of an integrated timekeeping and expense reporting, if you're not taking advantage of some type of integrated AP and AR, there's a lot of things right there that can definitely speed up the process. Suzanne, any other comments?
Yeah, I agree. And it's still a good exercise to put together that checklist, because you might be surprised the kinds of things that you can knock out in the middle of the month, or quiet time every day. You could just knock some checks off the check register. So there's all kinds of ways to get in there and try to take advantage of little bits of time.
Yep. All right. Well, I don't see any other questions. I do want to say thank you to everybody for participating today. We do appreciate your time. We will be back again next month. I like to say same time, same place. We are the second Tuesday of the month, 1 p.m. Eastern, and the title for next month is Fixed Asset Management and Depreciation. And so you will be seeing some emails, some information about that to register. And until then, thank you and have a great day.
Thank you.